Hello and welcome to my stock scanner. Today we're going to have a look at the stock Palantir, which has been on an absolute tear lately, and just over the last 8 months or so it has gone up from just down in the mid 20s to up in the 115-ish, and that is about 400%. Now, I drew the first arrows down here for my members back in June and again in September, saying that from a technical point of view, this could be an interesting stock. However, I didn't buy it, and today I'm going to show you why, because there is a very distinct rule set I have in my 3-point playbook that makes it impossible for me to buy. Now that of course is a bit annoying when you see a stock go up like this, but it also keeps me out of a lot of really bad stocks. So let's have a quick look at it. In my stock scanner we have here the playbook tab, and in the playbook tab we have the 3 points in our 3-point playbook. We can see if it's a solid company, we can see if it has a good upside, and then we can see if it is time to buy. I'll focus mostly on the two first today because that is where a lot of the argument for me not buying is located. First of all, right now, let's have a look at it and see it has a good quality. As you know, here in our point 1, when it's colored green, it's because we like what we see. So this is good, the revenue is good. PEG ratio is a bit high but close to green. We can see the return on capital down here is moving in the right direction, and so on and so forth. If we go into the summary, that is where we can find the numbers that are building these colors. So let's have a quick look. The reason I didn't buy last summer was about the earnings, to be honest. When we look at the revenue, it looks very good. Revenue is just going up nicely. However, the earnings per share were negative in 19, 20, 21, 22, and just went by break even here in 23. Now, last summer was the middle of 2024, so we didn't know how that would end, but the estimates was a bit more profitable than the 2023 numbers. If you've heard my videos before, you know that I'm looking for what I call freight train stocks. That means stocks that have been rolling steadily for a long time. And I know that Palantir have made less and less loss, but they still made a loss. And what I need to see in a stock before I buy it is that it has made a good profit for 2-3 years at least. That means that I cannot really get to buy Palantir before maybe a year more, maybe 2 has passed. And I know you're thinking to yourself that it might have gone up 1,000%. And yes, that's true. My strategy sometimes keeps me out of these fast runners, but that is just how it is. It also keeps me out of the stocks that completely collapses. If we go further down, we can see that the margins, the operating margins, were also negative and were actually fairly small here. We can see return on capital just went positive. So all of this just underscores that I could not have bought it last summer, however much I wanted, because I actually like the company and the fact that they're working with AI and big data, and they're helping big companies, governments, and so on. That is really attractive. I just needed to see some solid company underneath, and I couldn't. So what about right now? Would I buy it right now? Let's go into our valuation graph here. And if we look at that, here we can see that we have our numbers down here. We have the estimate for the earnings per share for 25 and 26. That is estimated to grow by 205% to this year and about 25% next year. Now, right now, let's have a look at it. Right now, Palantir in the last 12-month numbers are trading at a PE of 608. That means that you're paying $608 for every $1 in profit it makes. That means that if they didn't grow at all and you just kept making the same profit every year, it would take 608 years for you to make back your money. Now, I know they're growing, so of course it won't take 608 years, but it's just to say that these are the insane numbers you're buying into right now. I would never buy a stock with a PE of 608. Anyway, let's see the valuation again here. Right now, as we say, in 2026, it is expected to make $0.7 per share. And we can see here that our system, and this is based on historic numbers, and it is based on estimates from the analysts. So it is estimating a price earning at 116, 125 and 175. Now even 175 is high. I would not buy a stock with a PE of 175. But let's have a look at the numbers up in the graph, because if the earnings per share is correct, the estimates, and if we have the three price earning estimates, then we are multiplying these two numbers and we are getting three different price targets. And here we are getting a bear case at -27, a base case at -9, and a bull case at +9. That is simply not good enough for me. If I'm looking at a stock, and I should say these are the sharpest of the sharpest analysts here. So it's not like if you believe yourself that it's gonna 10x more than this, well then you're going against every analyst that actually knows a lot about the company. It could be that it's 0.8 or 0.9, but it'll probably not be a lot more than that. However, if these are correct, and if investors are willing to pay 175 in price earning, which I doubt. I haven't seen many stocks that can keep these sort of numbers. It's a bit like Tesla, that were up in the 1,000, 1,200 at some time, and then gradually moved down. At some point they were down to 40, 50. Now they are above 100 again with all the Trump, Elon Musk going on. But that is a very, very special case. So could Palantir be traded at 175? Maybe. But that would give them only roughly 5% per year over the next couple of years. All right, let's try and look a bit further into the future. Let's say we looked 3 years more into the future. And let's just assume that they could keep up the roughly 25% in earnings per share growth every single year. Now, if in 5 years from now, the earnings per share is 1.35. And I should say 25% gain in earnings per share is quite a lot. The company is growing very large, and the larger a company grows, the tougher it is to make hundreds and hundreds of percent gains in earnings per share or growth in earnings per share every year. But if they could do it, and if they could keep at a price earning of 175, then they would grow by 17% per year. 112% overall. Now 16% per year is great, but it's not really what people expect from Palantir. They're expecting hundreds of percent per year. If they can only, quote unquote, be sold at a price earning at 145, then we are 12%. And at 116, we are at 7% per year. This is not what people expect. So let's have a look at it again. What would it take for this annualized to be, let's say, 50% that many people are expecting? Would a price earning of 250 be enough? Nope, not at all. What about 500? Yeah, we're getting closer. 600. All right, we're about there. Maybe 620. Yeah. So if Palantir can keep a price earning at 620, and they can do that for 5 years, which I doubt, then yes, they could go up by 50% per year. But that is still not the 400% that many people expect them to grow every year. And if we take the other direction, and that is important because, well, to be honest, no one knows what happens in this sector in the next 5 years. If you think back 5 years from today, the world wouldn't have closed down from COVID-19 yet. Russia wouldn't have invaded Ukraine, and oh yeah, AI wouldn't really be a thing. So if you believe that you can predict exactly what will happen in the next 5 years, you are a bit naive. So let's say that Palantir goes back to something a bit more normal, and we could say something like Tesla being at a 60, 80 or maybe 100 in price earning. If they grow by these numbers, and we are talking about 205% this year and then about 25% the remaining 4 years, if they are at a PE of 60, 80 or 100 in 5 years time, you would be making either 4% per year, minus 0.6% per year, or minus 6% per year. That is the scenario. So right now, I'm not a buyer. What would it take for me to be a buyer? Well, I'm not sure, but I think that if we over the next 6 to 8 months could drop down in the, I don't know, 60, 65 area down here, well, then I might be interested because I still like the company and there is some great upside in it. Right now, it's just ridiculously priced, if you ask me. That doesn't mean it can't go up by 1,000%, and you're welcome to come back in a year and laugh at me and say you should have bought it. But I shouldn't, because I'm sticking to my rules. These rules have done very well for me the last couple of decades. And, well, to be honest, I'm sticking to what I know, and I'm not trying to predict the future. If you're saying Palantir should up by 1,000%, then you're trying to predict the future, or you're just barely guessing. That is okay, and I hope the best for you. I'm just still not buying Palantir. That's all for now. Bye for now.